Hey everyone, this is Samir here and welcome to the next episode of the Real Estate Show. In today's show, we're going to discuss the following questions. What are the most expensive condos on the market right now? Are they going to sell? Market stats. How did the market change in November? New mortgage rates. Can they go lower? Vaccine is coming. How is it going to affect the real estate market? Airbnb. Deadline is approaching. Time to register your homes. So let's start from the interesting things and what are the top 3 most expensive condos right now in Toronto? All 3 of them are located in Yorkville area in Toronto, which is not very surprising. And their price tag starts from the number 3, which is $12,800,000. This condo unit is located at 1 Roxborough Street and it's a penthouse number 2, one of just 14 residences. This custom suite features 12-foot ceilings, uninterrupted east and west exposures, 3 bedrooms, 4 bathrooms, approximately 4,000 square feet, and it has 3 private terraces with a private pool. Maintenance for this unit will be $2,274, which is actually not very bad. If you look at the next 2 ones, this is actually the lowest maintenance fee we could find. The second most expensive unit is located at 36 Hazelton and it's the unit 5B. This is listed for $13,500,000. This penthouse spans across 4,000 square feet with another 1,000 square feet of outdoor living space, and it comes with concierge valet and security. Monthly maintenance will cost you $8,585 per month. Now let's look at the number 1. The most expensive condo unit that is listed right now in Toronto is located at 128 Hazelton and it's the penthouse level. This condo is actually still in the process of being built, so you can choose the finishes and the way the unit will look yourself. Overall there will be 17 suites and this is the penthouse floor, and it comes with a private elevator, 4 parking spaces, 12-feet ceilings, 5,100 square feet of living space, as well as 3,000 square feet of terrace and with a pool. You will have the unobstructed city views from all directions. Maintenance fees are estimated to be $6,250 per month. Now let's look at the market data. In November 2020, we had 8,766 units sold, compared to November 2019 where we had 7,054 units sold. So this is a 24% increase. So it looks like the slowdown during the COVID is over and is rebounded. You see more and more sales every month. Now let's look at the average selling price. So in November 2020, the average selling price was $955,615. Compare that to the year earlier in 2019 in November, the average selling price was $843,307. So this is a 13% increase, which still shows you the positive dynamic in the prices and still puts the real estate as a better investment than other forms. Now let's look at the rental market. In third quarter of 2020, we had 14,036 units versus 10,781 units in the third quarter of 2019. So this is a 30% increase in 1 year. And one reason for this increase is that the prices dropped and a lot of people are trying to renegotiate their rents, and if they can't renegotiate, they obviously move out. Also, in some cases, the landlords are not offering the discounts, so the people have an option to pick a different place with a better view or bigger space or in a different location where they wanted to live previously. So this is a great time to do that kind of change. Average 1 bedroom in third quarter of 2020 was priced at $2,012, which is $250 less than in third quarter of 2019, when the prices were $2,262. That is an 11% decrease in price. But overall, that decrease is not very indicative to certain areas. So for example, in the Lakeshore area, right now you can find a 1 bedroom for rent from $1,400 to $1,600. 2 bedrooms you can find from around $2,100. So the year ago, 1 bedrooms in the same area were around $1,850, $1,900, and 2 bedrooms were around $2,800. So you can see that the prices did drop, and you can still find the great deals out there. Now let's look at the trend MLS sales chart. As you can see here, the growth until March, then there's a sharp decline in April. it started to grow from there. So in June, market already rebounded. So these 2 months when the sales were down, this is during the COVID times, and it already passed through that stage, so it like never happened. The growth rate is now higher than it was before the COVID. So the trend overall is an uptrend. So you can see that there's a positive indicators here. Same is true with the new listings chart. If you look at that, you can see that this 2 months like they never happened. The trend continued above the 2 months before the COVID. Now let's talk about the mortgage rates. So HSBC is offering a 0.99% 5-year variable rate, which is extremely low. I don't even remember this kind of rates anytime in the history. So the question is, can it go lower than this percentage? So obviously this is a variable rate. So variable rate is something that it can increase, so depending on the market rates, the rate gets adjusted. If you're risk averse and you want to go with a fixed rate, the lowest fixed rate mortgage right now is at 1.39% for 5-year fixed. Because of these low rates, we see now increase in the number of transactions and number of offers for semi-detached and detached homes outside the GTA area. Like the other day I was showing these properties at Ajax, and we saw more than 8 offers in one day. So they listed the property, they had only the time to put the offer was 2 days away, and they had 8 offers on the property. And when I was at the showing, there was like around 50-60 business cards. So it means a lot of agents showed the property, and it means there's a lot of interest outside the GTA because you still find great deals. The house we're looking for was around $550,000 for a detached house with a huge yard, with a hot tub. There's a garage. There's a 4-car parking space. It's a very big unit, you know. And for that price, you can't find anything in Toronto area. So that was a great deal. And because of that, we see so much interest. In Hamilton area, there are detached homes going for around $370,000. It's amazing, you know. In Toronto, you can't even find 1 bedroom for that price. So now let's talk about the new COVID vaccines. As we know, there is 30,000 vaccines that Canada has already received, and from those vaccines, there are 14 distribution centers where they have been sent. So in Toronto, we received around 2,500 vaccines the other day. Those will be given to the healthcare workers who are working in long-term care facilities. And the second stage, you'll have more vaccines coming, but those will be given again to the healthcare workers, to the residents of the long-term care facilities, as well as the indigenous people, the adults. And then the third stage will be for everyone else. So overall, the plan is to vaccinate everyone by 2021. So this will have a very huge effect on the real estate market as well. You will see a lot more transactions, and people will rush back. The companies will reopen, and that's why you will see a lot more people moving back to the downtown. That's when you'll see an increase in prices in the condo market. Right now, you still see the increase is very low in the prices. And in some cases, you even see a decline in prices in the condo market. But once this vaccination is done and there is no risks anymore, you'll see a lot more people working already not from home but in the offices, so they'll need to live again closer to their work. So you'll see a lot of influx of people coming from the neighboring areas, you know, in GTA and back to the Toronto downtown. That's when you'll see big increase in prices in the condo market. Now let's talk about the Airbnb. So you know the deadline is approaching to register your homes with the city. So it's 31st of December. That's the deadline when you have to go on the website of the City of Toronto and register your home if you want to continue hosting short-term rentals in your apartment or house in 2021. So there are 4 key points to remember about the Airbnb with the new regulations. First of all, people can host short-term rentals in their principal residence only. Both homeowners and tenants can participate. Second, people can rent up to 3 bedrooms or their entire residence. An entire residence can be rented for up to 180 days in a year. And people doing short-term rentals less than 28 consecutive days will have to pay 4% tax for the municipal accommodation. So there's a new municipal accommodation tax of 4%. which you'll need to pay. So what I noticed with these changes is that some Airbnb hosts, they're contacting their clients, asking them to do the transaction off the Airbnb, off records, so they don't have to pay these taxes. So this is very risky situation because if Airbnb finds out, you can be removed from the platform forever. So it's not a good thing to do, but some people are risk takers, so they do that. Overall, this Airbnb regulations, they were done to have more homes come and enter the market for long-term stays, so they can increase the supply of homes. But with COVID, these effects were doubled, so now you saw a huge decrease in prices because of this. COVID and Airbnb regulations, they all came at the same time. So I think the government was not expecting that the prices would go down so much. So it actually pushed away some investors in real estate who were doing business just by buying and renting their spaces. Now because of COVID and because of these Airbnb regulations, they're now less motivated to invest in the real estate, buy more units. And that's why you saw like some decline in this. But once this, again, vaccination is over, the market will go back to normal. So thanks for watching. Please subscribe to this channel. If you have any questions or suggestions of what should I talk about in my next episode, please comment them down below. I'll be glad to answer those questions. Thanks a lot and wish you have a great day. Stay healthy. Bye.